Hi, I'm Kep Kepner, CPA here in Dallas. We've been talking about construction bonds and how they work. When you think about it, you think, well, is this just a new thing in this ever complex world we live in? Actually, the idea of surety or creating a bond dates back to Mesopotamia, to Syria, to Middle Eastern countries 2,000 years before Christ. The concept of an individual surety goes back all that time, where one person would guarantee the performance of another person. Now think about that. You wouldn't probably want to guarantee that your neighbor down the street would do their job well unless you got paid something for it, and unless you had some confidence and knew something about their character, unless you knew something about their financial wherewithal. So that's what happens with a bond. So this idea of a construction bond or a performance bond that we see today really goes back 5,000 years. The first U.S. insurance company to write bonds was Fidelity Insurance in 1865. So that's 150 years ago. Relatively new when you consider that individual surety bonds were available 5,000 years ago. So sometimes in today's world we look at a bond or a guarantee or insurance and we think, wow, that's pretty much, it's been around as long as I have, but maybe you don't realize that this has been around for 5,000 years and there's a foundation for all of this. But think about it. A guarantee. If you guarantee that you're going to do something, well, that's okay, because you know you either will or you won't, and you know what you're guaranteeing. But to guarantee somebody else, that is a different matter altogether. Now, people think about SBA loans. In fact, the terminology, SBA loans, that's not correct. The SBA loan program is a guarantee program. Here's how it works. You go to a bank to borrow money for your business. And let's say they check you out. They look at your financial statements. They look at what you own. They look at your credit history. They look at your character. They see if you borrowed money before and if you paid it back. So that's what the bank does. And let's say they do all of that. And they get down to the end and they say, well, I'm not sure about this. This is really marginal. Well, the bank would feel really a lot better if they could get somebody to guarantee your loan besides you. Okay? Well, that party can be the SBA. So the SBA actually guarantees a portion of a bank loan. So the bank then feels better about giving you that loan. Now, SBA loans are a little more expensive. You've got to jump through some hoops to get them. But the reality is, if you're just on that marginal place where you might not qualify, then the SBA is a way to get a guarantee and encourage the bank to loan to you. The big banks today, all the national banks, are preferred lenders, which means that they can lend to you an SBA loan, guaranteed loan, without going to the SBA because they're big. So they can do that. If you go to a small community bank, you probably are going to have that bank take the loan package to the SBA. In these cases, smaller banks and credit unions will often use what's called a loan packager. I have a client of mine in Dallas, been a client for many years. They package SBA loans. In fact, they did some of the earliest SBA loans in the Southwest, and their loan package, which includes financial statements, tax returns, projections, all of that financial information, their package is used as the foundation or the model for a lot of SBA packages in the Southwest because it's so comprehensive. So if you want an SBA guarantee to make sure you can get that loan, and you're going to work with a small bank, you probably are going to need a packager to help. Now, banks, big banks, do not want to loan you a bad loan. Even though they don't need to go to the SBA, if they have too many bad loans, then their preferred status can get jerked from them, and they're back to being just like a small community bank. So if you need help with your SBA loan, or if you need to find a surety to guarantee your construction loans, we're experienced in that area and can help you. Just give us a call. Thanks.